But we also have a viewer joining us. Okay, Jayesh Shukla is writing from Ahmedabad, Ratnesh. He's asking how far can the IT index and frontline IT stocks go up from here? Now that's going to be a very key question with many viewers.
Yeah, so I think if you look at IT today, while the sector has outperformed, I think about 4 or 5 months back, we gave a very strong call to switch from consumers to IT. And our view remains that that call is still very good. Because if you look at IT sector, while it may have outperformed, the valuations are not necessarily in the excess zone. And, you can get, the frontline IT stocks in the mid-teens kind of valuations. And if you also look at in IT, while some amount of rupee depreciation might have been built into the forecast, a lot of it is not. So I think you might have almost up to 60 rupees to a dollar built into the earnings forecast, but not a 63, 64, 65. And what is certainly not built in is the fact that there could be demand recovery, dollar revenues might be getting better. So I think there are still, I think earnings forecast itself might go up. So the current valuation, which are not excessive, might look further more attractive. And the demand environment itself might surprise on the positive over the next 12, 18 months. So I would still be positive on IT over the next 6 to 12 months.
Ratnesh, do you think that there is more steam in the broader markets? We will see that one catch up with the rally in the heavyweights?
Yeah, so I think for the broader market, as far as this bounce back is concerned, probably we can get up to 6,000 or thereabouts. But thereafter, there will be huge sort of resistance which will be there simply because the largest sector in the market, which is banks and financials, they have a huge headwind in terms of the structural factors. Obviously, in the stabilization of the currency, the banking sector benefits the best. But probably that is a time to rebalance or to portfolio away from the banks rather than chase the banks.
Right.
So I think pullback or the weight of the banks will hold the market at around 6,000. At which point it'll begin to face a lot of resistance.
Okay, let's take forth that point that Anuj was making about how some of these high beta names are coming back and some of these consumer names are moving to the back burner for the market. Ratnesh, you held a consumption conference in the month of August and you pointed out that you're noticing demand weakening in staples and in discretionaries as well. How much margin contraction you reckon some of these companies like HUL may have to face because of the slowdown both in growth as well as the rupee depreciation?
Yeah, so right now what you've seen, the trend is more on companies talking about demand slowing down, especially in the tier 1 cities. That's where the demand slowdown has been seen. At this point in time, you don't have companies really too much worried about the margin compression, but that is obviously on the way. Some of the input costs will go up because of the currency depreciation, but I don't think that has entirely gone or factored into the thinking as yet, because the currency itself has been all over the place. So what is the variable that you use to make that assumption? But needless to say, consumption, which has been a theme holding the market in the last year and a half, is something, because of valuations, because of a whole lot of other factors, it has already started underperforming. And it is going to continue to underperform for the market as a whole. There are obviously going to be certain pockets of consumption which are still going to be holding up, but overall on a sector basis, consumption will underperform here on, and that is why back 3-4 months back we gave a call to shift from the consumer sectors to the IT sectors, because that is where much of the upgrades are still remaining. And one of the things which has started happening is that the earnings have started to gradually get cut in the consumer sector, which had not happened earlier. In the last 2-3 months, we've seen some amount of earnings cut as well.
But,
as far as job creation is concerned, while IT gets the headlines in terms of creation of jobs, but actually the biggest segment creating jobs is services overall. And within that, you have trade, hospitality, and all of those services. And if you look at some of the growth numbers which are there, I mean, they are very poor. So you generally have the transition of let's say migration workforce going from the rural to manufacturing and then services. In our country, because last 10-15 years manufacturing hasn't really had a big amount of growth, so the lot of the job creation was subject to or dependent on services. So as we go forward to the next phase, I think what you are likely to see is that in IT itself, the job creation is not likely to be linear anymore, because that model cannot be afforded. So more job creation has to come from manufacturing. Manufacturing has to come back, investment has to come back, and that will be followed by services coming back.
Okay, so
in terms of job creation. So I think consumption, that is the basic challenge that we noticed at our conference also, is that right now there is a demand which is slowing down, and within that it's then a challenge as in which companies are still able to do well. Like for example, there's still no impact on cigarettes. So I think ITC is still good.
And which other stock?
Rest of the stocks have a bit of a headwind on the demand side. Yeah.
Okay, guys. I want to come to you on this. You were talking about that 6,000 level that this pullback could continue to. But if you had to make any investment call at this point, would it be any of these large cap names? I mean, we're seeing buying in HDFC, ITC, L&T. What would you recommend now?
No, I think for us, at around 6,000, once again, the focus has to go back to technology, has to go back to telecoms and energy, because beyond 6,000 or 6,100, whatever is the exact, that is hard to tell. But beyond that, we don't necessarily have the earnings momentum right now. And one or two of our large sectors in the market, be it financials, be it infrastructure, there is a huge weight of negative structural factors at play. So they will hold back the market. So if the market was to hit around 6,000 or 6,100, I think the portfolio has to be then more and more weighted towards technology, energy, telecoms. In fact, telecoms, as we were talking, we have seen some good amount of rational behavior coming back into the industry. The sector saw its worst time a few years before now, whereas some of the sectors are seeing their worst time now, be it in the infrastructure space or financial space. So it is somewhat contra-cyclical to be positive on telecoms, incumbent players at this point in time.
I guess Bharti also gets a currency advantage if the rupee has shied away from 68 for good. At 330, you like Bharti?
Yeah, we like Bharti. You have the basic benefit of, as Mr. Aga said, some of the average realizations are going up. It is a defensive sector. The amount of demand destruction that an import compression can cause in some of the other sectors is not necessarily there in the telecoms. And the hope is that given the financial difficulties which might be there, for a lot of players, and the banks may be also slightly more conservative, that the irrational competition is not coming back in a hurry. So the industry landscape is different versus 3-4 years ago, and I think Bharti is a great buy, even at this level.